Hello, friends. Welcome to Liquidity Narrative Classroom, the second week. As you already know, this channel is built apparently for traders who want to understand trading in the right format, in the right way. You want to understand market structure, you want to understand liquidity, you want to understand institutional price delivering, price action. This channel is for you. The classroom is for you. It's not built for those who chases signals. No, we don't give signals. We are here to help each other learn and tread in the right direction and in the right way. So, like we've already introduced the topic, last week we've talked about um, the big difference between the retail traders and the smart money concept trading. So today we are diving deep into the painful truths. What is the reason? Why do retail traders lose money? 80% of retail traders, they lose money in the market. Why so? And more importantly, how can you stop being one of them? So this week, starting this week, if you listen, if you look into this, if you take this serious, I promise you, you will be one of those people who will stop losing. So if you're tired of blowing your accounts, if you're tired of repeating the same mistakes, this teaching is for you. So if you want to learn in the right way, in the right direction, so like we've said, why do retail traders lose money? Do you apparently know that most retail traders, yes, they lose money, not because the market is impossible. Yes, the market is not impossible. Is trading difficult? Yes, if you don't understand it. But if once you understand it, it stops being impossible. So it's not because the market is impossible. Like we've said, because they enter the market without understanding how price truly moves. They enter the market copying someone who has shown something out there they don't really understand, but they believe that, oh, this what works. So, and most traders are being taught entries, nothing more. They are not taught structures, they're not taught about liquidity, they're not taught about anything, the market behaviors. They know, okay, once you see this pattern, it means to buy. Once you see this pattern, it means to sell. So, but never taught them liquidity. They were never taught structure or market behavior. And that's exactly, sorry, that's exactly why most traders or most trade fails. So in today's class, we are breaking down why retail traders loses money, why they lose money, the most common mistakes, beginners, even those who are not beginners, but they've been in the trading industry, but haven't gotten it wrong, right? The most mistakes that they make and the first steps for you to become a consistent, disciplined trader. You will learn in the right way if you follow up in this particular thing. So moving on, so let's understand it. What most retail traders or why most retail traders lose. Why do they lose? I was once like that trading, and then as a Christian, I like God, I needed you to teach me how to trade. I prayed, I got the right materials, I started learning. I want to tell you the story because most times it'll help you, because this is not just like one of those, it's not like another random channel that are being built. No, it was out of passion. So as I was like praying and prayed about it, I was being taught, the Holy Spirit helped me. I was learning, but I was not patient enough to put to work or do it the right way. So I kept on losing. At the end of the like, God, why? Why am I losing? And all this party. And I was like worried, trying to figure out. Sorry. Hmm, why is my throat blocking? So I was like, I prayed like asking the Holy Spirit, why am I losing? What? You've been teaching me rightly, and I'm not understanding this thing. Then he just told me one thing. He said, because okay, he said, if you're not doing it in the right way, how do you expect to win? Something of that nature. This is me paraphrasing it. Like, you're not doing it in the right way. You have done it in the right way, you won't lose. I'm like, okay. So it's not about praying, it's not about you can be taught, but if you refuse to put to work what you've been taught, At the end of the day, you will end back in the same cycle that you're trying to break out from. Why am I saying this? So the first thing traders need to understand is this: the market is not random. No, it doesn't just it's not just like a play chart. It's not just like something that can go up and come down. It's not a random movement. It's a programmed movement. The market has a purpose. Price moves with purpose. Is looking for something. As you can see here, if you don't understand what market is doing at this particular place, you apparently look at this as a breakout. And we've been taught breakout traders, market breaks out and you're like, okay, the uptrend continues, but this was apparently coming to take liquidity to get back. Yes, it might be a pullback, but let's take a look at the huge drop on this, and this is like a higher time frame chart, as you can see. So most traders loses because they trade emotionally and reactively. We chase candles, we overtrade, ignore the higher time frame structure, and then we risk too much and then enter trade without understanding liquidity. Just like we've explained in this particular area, you enter without understanding liquidity. Was market grabbing liquidity? You thought it was a breakout and you took the trade, and that was it. Lack of understanding, lack of patience, lack of not knowing what you're doing, lack of not doing it right. So many retail traders believe that trading is about predicting the market. So they know, okay, they predict. So that's why we always said this is not prediction. We prefer to take structure over speculation. So it's not about predicting the market. Why they are predicting the market, where they are chasing signals, where they are trading intra pattern that have been taught to them. The professional trading is busy understanding, knowing that market is more of a probability and narrative. Yeah, understanding the probability is, does the market have the probability of going higher? Does it have the probability of going lower? It's not like a certainty, it's a game of probability. And if you can get the right probability, you'll know you'll get more profit. Does it mean they don't lose? No. It just means that the probability of winning is higher than the probability of losing. So, and the retail traders often focus only on entry. Like I said, they are learning the entry pattern, engulfing pattern, all those things. They are learning it. This is the pattern they are learning how to enter a price get to resistance, and it shows you what's it called, dojo or whatever. Then short the markets, buy the market. So they are learning only entry, while the institution traders focus on liquidity and delivering. That's a huge difference. So, like my story, I've said before that if you learn the right way and do it in the right way, you will be able to trade the right way. You can be taught, but if you are in a hurry to make money, if you're in a hurry to show off, you will keep being in the same place you have been. So don't be part of those people that are losing. You've seen the reason the market is not random. Price move with a purpose. Ask yourself, what's the purpose, or where is the price planning to go to? So that's the first question you ask yourself. Do not put your trade with emotion, or we said emotionally. They feel like, okay, it's not that everybody has an emotion. So you don't have to put your emotion, okay, I feel like it's going up. You feel it's a feeling, not what the market is saying. So what next? We'll be looking at the retail trader cycle. What cycle are they running into? So as a retail trader, one of the things you need to do is this: don't always I'm giving you this advice, don't always ask for fish. Don't ask people to give you signals. That's like taking fish, you eat fish and that'll be the end of it. Rather, try to find a way to learn how to fish. Ask them to teach you how to fish. Don't just give me fish. That's what I believe. So don't trade emotionally. Don't do a revenge trading. So most traders, they go through the same cycle. First, we have a discovering. I've discovered this channel. Oh, the person is doing well, and then before you know it, you've discovered the channel online, and the person is showing off some of the things, and you think, yes, the person has it all, he or she has it all. That's the big word. Show you a lot of profits, the flashy profits on social medias. What you see on the social media might not be exactly the way it is. Am I saying that people are not making money? No. I'm just saying most of them are not making money. So the profit they are being flaunted to you on the social media. The next thing, you begin to search for the perfect strategy, and you think the person has a perfect strategy. So once you got the perfect strategy or the perfect signal room, the next thing you do, you jump into using all kinds of indicators. You're looking for signals, you're looking for bolts, you're looking for random YouTube strategies. There are so many of them are out there, deceiving a lot of people. Eventually, you start trading and over trading because you want to recover what you've lost. So what would this lead to? It leads to emotional trading. It leads to revenging. You want to revenge and get back. Before you know it, you're blowing your account. Before you know it, frustration sets in. Before you know it, you're like, oh, this thing doesn't work. So the problem is not strategy only. The problem is mindset and understanding the market. If you have the right mindset, the right tools, and understanding the market, you won't be in this cycle of trying to discover who is the best, what the person is showing, the flashy profit that they've made. You are hunting to be like them. Before you know it, you start trading with all kinds of indicator and everything, and before you know it, over trading. Before you know it, frustration comes in. Before you know it, you've blown your account, and at the end of the day, you're like, why? What have I done? Or why am I not getting it right? Is there something that I don't know? Yeah, there's something that you don't know because there's something that they are not telling you about that. Don't be in the cycle. That's the reason for this class, to take you away from this cycle of traders who thinks that they can do it overnight. All right, moving forward, let's look at the common mistakes. Now we've dived into the most the important part of this. We said the common mistake one is trading without a plan. So most times we chose we don't have any plan. Why am I trading? Ask yourself the reason why you're trading. If you have the real plan or the real reason for trading, it will give you a mindset to sit down and study and understanding the market. So you don't have plans, there's no plan. Because you don't have any plans, you did not study for bias, you don't have any narrative, you don't have any structure. It's purely emotions. You just want to trade, you just want to make profits. That's what the rated traders are looking into. There's no bias, there's no study of what the higher time frame is doing. There's no structure of what the market is doing. There's no narrative. But the professional traders, they sit down, they prepare before the market opens. So, and they ask question, what is the higher time frame trend? Where is the liquidity resting? What is price likely to seek? Is price likely to go higher? Is price likely to come down? Why will price likely to come down? Why will price likely to go up? What's the price looking? Which zone is the price? Is it on the premium zone? Is it on the discount zone? Has there been any displacement after the price done a run out from a particular zone? So when you ask yourself this question, you'll be able to know exactly what to do. That has given you a bias, it has given you a narrative, it has helped you to know the structure, and then you are trading with the right mindset. So do not enter trade randomly. Do not trade without preparing. Do not trade if you don't have any plans. Because if you do, the market will definitely expose your weakness. It will expose you quickly. It will expose it to help it to help you to even lose. It will give you something to look out to and believe that it is right. Don't be among those without bias. Don't be among those who doesn't study the market narrative without any structure. Ask yourself those questions. They will help you. What is the higher time frame trend? Where is the liquidity resting? What is price likely seeking? Where is price all these things. That's the mistake number one. Trading without plan. Plan your trade and trade your plans. So the mistake number two, that's risking too much. Like we said, most beginners focus on profits before survival. Because of the flashy stuff we are seeing online, so we want to be like them. We want to make money quickly. We want to be part of those who can say, I'm making money in trading. But that's dangerous. A lot of retail traders, they risk more than they could bear. 10% of your account, depending on what your account is, 20%, even 50 on a single trade. So that is exactly gambling, because you think is one-time chance, get it at once. No, the market is not like that. The market is not going anywhere. The market is there. You are the one who is in a hurry. Don't gamble with your money. Don't gamble in your trading. The professional traders understand this. Protecting your capital is the most important thing, is the number one, because if you don't have capital, you won't be able to do a business. But if you lose small, you still have more. Let me take, for instance, you have a particular capital and what you're losing is just 5% of that capital. You still have like 95% to try again over how many times before you can say, I do not get it. So they protect their capital one. You can always find another setup if you miss the market. It's not going anywhere. The market is always there and it's always showing you something. If you don't understand it today, if you put yourself into it, you understand it tomorrow. Because if your account is gone, you cannot take a trade. So you keep losing money. Maybe you're working and you're putting the money there. No, take your time, learn the process, and then do not risk too much. As you're starting, grow from there. That's mistake number two. Common mistake number two. Do not risk too much. Don't be part of those who risk too much. Then we move next. Number three, chasing breakouts, which we've said before. Retail traders, we love breakouts, break and retest. Market just broke out of a support or broke out of trend line, and then we chase, go through the market, and the market reverses and take us out. So they chase breakouts, but the institution traders understand where retail traders place their stop loss. Let's take, for instance, you put your stop loss here, thinking this is a resistance, and so you put it knowing to where the market might get to this place and reverse. Stop loss is here, and they know. So, and that's the reason the market took out all the stop losses and then reverse. Some other people, so you can like, okay, I'm a breakout traders. The market has broken out and retest here. So you took a buy. The market kept going up and you're like, okay, I'm on the right side of the market. And suddenly the market reverses and takes you out. And your stop loss is somewhere here. Even if it's here, even if it's here, you can see how huge this particular chart has dropped. So what's the market doing? Chasing to grab the liquidities. So for those who are doing the breakout trader, chasing breakouts when the market has already moved, don't do that. So what happens? Immediately the price has already broken the level. You're entering late because you thought this is the right thing to do. That's just liquidity being taken. Do not trade breakouts, whether breakout of resistance and support or trendline breakout. The market is looking for something. The market often sweeps liquidity before delivering the real move. This is why understanding liquidity changes everything that you are doing. When you understand liquidity, it will help you to see clearer and the reason why the market is doing what it's doing. So let's move next to the mistake number four. The common mistake number four is ignoring the higher time frame structure. What is the structure in the higher time frame? What is the higher time frame saying? Because trading lower time frame without the higher time frame bias is like driving with a blindfold. You're just maybe doing something that won't benefit you in a long while. So that's another major mistake by trading only the lower time frame. So your higher time frame chart depends on the kind of trader you are. What is your higher time frame? Some traders, they see a setup on 1 minute time frame, or they've seen someone trading 1 minute time frame. You don't know the reason why the person is trading 1 minute time frame. So you said, okay, I don't have time to wait for this. The person has probably studied the market. I know a lot of professionals who do 1 minute charts, and that's so beautiful because they've studied it, they've done it in a long while, and they know exactly what they are looking for. Do not chase it. So you seeing a setup in 1 minute and you think you can do that, going in and then you keep losing. Do not ignore your daily charts or the trend of your daily charts. Follow your higher time frame structure because that controls the lower time frame movement. Always begin with your weekly buyers. Find out what your daily structure is. Find out where the liquidity lies. That's exactly what we do, studying what the bias in the weekly is saying, what is the structure in the daily time frame, where are the places liquidity lies. Then you refine this to your time frame of entry, your lower time frame. So you're going from higher time frame to the lower time frame, and wait for your lower time frame to align to be in line with your higher time frame to take a trade. Understand structure, understand break of structure, which we've already taught in the previous class. Understand market structure shifts. When the market structure shifts, all these things will help you, but follow the higher time frame first. Do not ignore the higher time frame structure. It will help you to know exactly what you're doing. This is the common mistake most people do. They don't know exactly what the higher time frame is doing. Don't be part of them. So learn this today and have peace of mind. The next common mistake that they're making is overtrading. We've talked about that. After maybe you've losing you mix a trade or you've lost a trade and you want to revenge. So you double your position to recover. And at the end of the day, you figure out, say, oh, okay, I understand. You take another trade. So, like we said, many traders, they believe that more trade equals more money, but that's not true. That's false. You can have one trade in a week that is much more than someone who has taken 20 trades in a day or 20 in a week. It just depends on if you know exactly what you're doing. So it's a false thing for you to believe that more trade equals more money. No. Over trading destroys discipline. Because if you have discipline, you will know, okay, I'm taking, this is the time of my trading, not just following or chasing everyone around. The market does not provide high quality setup every hour. So if you know exactly what you are doing, you know the time of trading, you know the days you want to trade, and you discipline yourself to do that, despite what happened in the other time, how the market moves in the time outside your trading hour, how the market moves in the days outside your trading days, you are okay getting what you've gotten in your trading time and trading days. That is discipline. But doing over trading, not just destroy you mentally, it's destroy your discipline. And remember that sometimes the best trade is no trade, because if you don't have any, if you didn't take any trade in a particular day, you do not lose money. Yes, the market might move hugely. Your setup might have been there seen in the market. It doesn't matter. There's always another day for you to take a trade. Professional traders wait patiently. They wait patiently for liquidity sweep. They wait patiently for displacement. They wait patiently to know that the market is in the place they want to trade. That's their confirmation, not just our normal confirmation or waiting for engulfing pattern, waiting for oversold, overbought indicators. No, they know exactly what they're waiting for, and they are patient to see all that they've mapped out or planned to be in line. They wait for their narrative to align together. So patience is a part of the edge in the market. You can see someone who knows how to trade. Without patience, the person keep losing because he's always jumping into the market, trying to get something in the market. It doesn't work like that. But someone with patience might get just one trade in a day, and it will pay off more than someone without patience. So stop over trading. Learn to be patient. Watch what the market is doing. Plan your trade. Follow your trend. Follow your trade and do the right thing. Don't destroy your account before time. This is another mistake that the retail traders are making in the market. The next one, learn to put together the things you've done in the market, what you are trading. That's um Keep journals of your trade, what you traded, how you traded it, the strategies you used, what you saw in the market. Let's take, for instance, in this, you can see this might be a journal like, okay, I'm trading Fair Value Gap, I'm trading other block. Where is the market? The market was, I'm looking at the market to get maybe a higher time frame. I'm looking at market to this to give me a displacement. I'm looking at the market to return. Does all these things, are they together? If they are together, put them somewhere, because it will be a guide for you. It will help you to keep track of everything you've used for your trading, even the time the market got fulfilled, what was right, what wasn't. All these things will help you. Yeah, some of the things I did my early days was using Word. I'll do a screenshot, like you can see. I've already mapped out everything in the chart. I'll do a screenshot to see exactly what the chart was. And when it finished playing out, I'll do another screenshot to put them together and do a note on it to give me a journal. So those are the ways. Find out what works for you. So do not just trade without putting together the things you are trading. Most losing trades or traders never review themselves. So if it didn't work, you go back and look at yourself and say, what worked, what did not work, what can I adapt and improve? So they keep repeating the same mistake because they never study their behavior. A trading journal helps you identify emotional mistakes. It helps you to kill your weak setups, as then impulsive interest. It helps you identify all those things, and the poor risk management. If you do not track your behavior, you cannot improve in your trading, and that is the truth. So you need to keep journals. That is very, very important. Does it mean if you don't have time for a system, you can use a notebook, whatever that works for you. Find out what works for you and use it in your trading. This will definitely help you keep journals of all that you're doing. Okay, you can take a screenshot, you can draw it, whatever work. You can use softwares online to help you, but take journals of your trading. All right, moving forward. Now the question is, how are we going to improve? How are you going to improve in this? We've talked about all the mistakes. We've talked about what you shouldn't do, what you should do. Then the first steps to improve. This, learn market structure. Start with market structure, learn market structure, understand your higher time frame. What is it making? Higher highs or lower lows? Understand break of structure, like we've said, understand market structure shift, learn market structure. All these things are under market structure. Learn them. If you understand this, that's the first step. Next, move to study liquidity. Take your time to do all these things. Learn where the stop losses rest and why price target those areas. That's the reason for this classroom. That's the reason to help people who are willing to learn. So learn market structure, learn liquidity, focus on one model only. Do not try to gather as much as. If you can master one, that one can make you millions of money, more than someone who has 20. But when you improve one, you can now add another one. But focus on one. Do not learn 10 strategies at once. It will take you, it will drain you. Master just one framework deeply. It will be your help to you. Then the next one, risk small. We've talked about overtrading, just risk small. We've talked about risk management. Your goal earlier is survival and consistency, not fast profits. And that's the mistake most of the retail traders, those fast profit, they want to make it. See, if you learn this thing in the right way, that profit, you will get it in a long while. So throw away whatever that is going to make you to be in a hurry. Learn this thing. The next step is, we've talked about, to keep journal of everything, the winning trades, the losing trade, your emotion. Were you in the right frame of mind when you take the market? Were you in a hurry? What didn't you see? Keep it. And then develop patience. The market will definitely come to the place where you are waiting for your setup. Remember, trading is not about forcing setup. It's about waiting the setup to form. It's about waiting for high probability condition. Focus more on your weekly, your daily chart for buyers. Map your liquidity pools before the market resume. Keep a simple trading journal. So at the end of the day, wait for your higher time frame and the liquidities and the structures to come together. Be patient. Remember, it's quality over quantity. And that's the reason we prefer to take structure over speculations. If you can take those steps, it will help you to improve. And that's the reason we put in place this classroom. Some of the things can be in a writing form. Some of the things we will go to the chat to do it, whichever one or how the topics comes over. Follow it and you'll be able to improve in your trading. So the real truth about trading is this: trading is not easy. So I'm not gonna say it's easy. No, never. Trading is not easy, but at the same time, trading is not impossible. There is nothing impossible if you want to learn it and you put your mind to it. That is the truth. If you put your mind to it, you will learn it. All you have to do is to follow the process. The market rewards discipline. Discipline yourself. The market rewards structure. The market rewards risk management. And the market rewards patience. But most retail traders lose because they chase outcomes instead of understanding the process. Follow the process. Doesn't matter how long it's going to take you. Follow the process. The traders who survive long time are the ones who learn to put their emotion in control, who learn structure analysis, who learn liquidity concepts, and who are consistent in the process. That's the reason for this channel, trying to build a community of traders with the right mindset, a community of traders who will follow the process, no matter how long it takes them. All you have to do, put your time, put your mind to it, and you'll be able to get something out of it. So if you think you really want to improve as a trader, I will say this to you. This is my advice to you. Stop chasing for shortcuts. No. Study price, study liquidity, study structure, because the market will always leave a clue. It will always leave clues in the market for you to see and use for your advantage. Yes, you just need to learn how to read them. Map your liquidity first. Remember, I will leave you with these words. Go for structure over speculations. You don't have to stay in the losing majority. I know this. Watching this to this place has already put you ahead. That means you are very serious. And remember, this will always drop our Sunday weekly liquidity map every Sunday for the week so that you can be able to take a look at what we have taught here, go back to your own charts, put it into practice, and see what happens. And if there's anything you really want us to talk about, you can drop in the comments section. And what mistake do you think you've been making? You can drop in the comment section. Let's see how we can build a class around it. Once again, thank you. This is Liquidity Narrative. Wait once again for Sunday drop, and then next week we'll be able to have another educational class. Thank you and have a lovely time. Bye.